Welcome to the Real Estate Women's Podcast. Thanks for pulling up a chair to our roundtable discussion. Here, we'll teach you how you can create a stream of passive income through multifamily investing, and we'll help you to shift your mindset so you can start living the life you really want to be living by design today. Hello, guys. Welcome. We are the Real Estate Women, and I'm Crystal.
I'm Candy.
I'm Colleen.
I'm Tamara. Welcome to the Passive Investing Podcast. In today's episode, we are going to talk about the tax benefits of investing in multifamily real estate. Most people are unaware that when investing passively in multifamily real estate, not only could you be making income off your investment, but there are also maybe tax benefits to investing as well. And that's why we brought Melvin Young on this episode. Unfortunately, we won't be able to discuss every tax benefit available in our time with Melvin today, but we are going to try and cover the basics that most people may qualify for. Hi, Melvin. Thank you for joining us today.
Hello, thank you.
So Melvin is here today as a representative from Modwealth. Modwealth is a business advisory firm with the purpose of ensuring business owners have the tools and resources they need to grow their business without the fear of paying too much in taxes, falling out of compliance, or having the ability to identify traps that could cost them money or even worse, their business. So Melvin, now that we've gotten through all of our intro for you, could you touch on some of the tax benefits that are only available to real estate professionals? And could you tell us a little bit about what the IRS's definition of real estate professional is?
Certainly, yeah. So, first of all, again, Modwealth, business planning and strategy. We help small businesses. We do focus a lot. I'd say the vast majority of our business is working with individuals in real estate, whether they're doing syndication, whether it's passive, whether it's active, managing syndications, the whole bit. There's obviously tax implications to every example there. So very, very holistic and very focused on the real estate sector. So when we're talking about real estate professional status, what we're talking about very specifically is the ability to take your depreciation and offset your actual 1040 income. So that's the primary benefit of being a real estate professional. The benefit of that specifically is, let's say you made $100,000. Let's say you had $50,000 of depreciation. Well, you're being taxed on $50,000 as opposed to $100,000. So if you're wanting to calculate what that means for you tax-wise, you'd simply multiply the $50,000 in depreciation times your marginal tax rate, whatever the IRS is taxing you. Thus, that gives you your tax benefit. So, needless to say, real estate professional status is extremely important for offsetting or using that depreciation to create tax savings on a 1040. Because again, the vast majority of real estate professionals that we work with are in a pass-through environment, meaning that money's coming through their LLC or their Schedule C or their Schedule K if they're an S Corp, down to their personal 1040, which is allowing them to pass through that income and have one tax rate as opposed to two, a corporate and a personal tax rate. So there's so many benefits and so many areas that I can go, but real estate professionals have to have 750 hours of real estate focused work. I think the key with understanding the real estate professional status is understanding what the IRS would do in the event of an audit of your status. Okay. So again, although Modwealth is a tax planning service, we're a compliance driven service. So we think, hope for the best and prepare for the worst. And that keeps us in a formality-driven environment where we're constantly helping real estate professionals do things that would take a lot of time, where we automate that process. So with that being said, real estate professionals, or if you're on track to become one, you should be keeping a log of your hours. because that's going to be one of the things that the IRS is going to look for. They're going to look for, how are you documenting these hours that you're saying that you're working, right? So that would be the first thing. What Mode Wealth would do for someone who's in the process of becoming a real estate professional is we would automate that log keeping process. So I feel like I've said a whole lot of stuff. So let me stop for a
I have a
second.
question around that.
We'll take a second to
So,
talk.
what if I'm not a real estate professional? Can I take advantage of any of the deductions that you just talked about?
No, you can't take advantage of the depreciation just because you'd be disallowed to. But keep in mind that real estate syndication in and of itself is a
Sure.
tax strategy. So if I could say one thing to your listeners, that's one of the things that I would say. Real estate in and of itself has very specific tax codes. For instance, uh, capital gains is less of a tax rate than income, for one. So you're still going to be taxed as a passive investor, which means that you're going to have several benefits that are specific to business ownership, right? And that's where Mode Wealth comes in line. So even if you're not a real estate professional, what we would do is, number one, if you can get there in a reasonable time, we'll put you on the track to become a real estate professional, because you simply can't beat the ability to take that depreciation as a loss. Okay. But beyond that, we have several strategies for, that passive investor. Maybe they've got great W-2 income. They're doing syndication because they want all the benefits of syndication. Uh, and they're wanting to be able to express as many tax saving strategies as they can. There's several. There's simply several strategies depending on a person's individual and business situation. So I can just run down a couple that you might heard. If you have children, we can hire your kids. We can show you how to hire your kids, and we can manage that process. Um, so one thing I've learned about people that work in real estate, and you guys may agree or disagree, but the vast majority of people, specifically if they're a realtor, they can be all over the place in terms of organization, right? Most of them can be very type A, meaning go getter, sell ice to someone who has a house made out of it. Um, but at the same time, the formality of of getting their paperwork together, making sure that they have a P&L to provide to their tax person, professional. A lot of times those things are just really, really out of whack. And so they come to me a lot of times at the end of the year with a stack of garbage that I'm expected to sort of discern, and that's a fun process. So the problem with that is, obviously, if we're in the tax savings focused zone, we have to work in the windshield as opposed to the rearview mirror. There is no tax savings looking back. It's too late. It's too late. What you've got to do is make a conscious, deliberate decision to tax plan and start tax planning. Yeah, I'm going to tell you, you lost out on this much money, but moving forward, windshield, here's the type of savings that you've created for yourself by doing these strategies. So you can do things like hire your kids. Uh, Creating an S corp in and of itself is a tax strategy. So if you're an LLC and you're producing enough income, um, now there's so many things that we can dive into there. I mean, you want to. When I think S corp, I think short term, uh, you know, short term investments, right? And when I think LLCs, I think long term investments. There's a lot of reasons why we want to do that, and a lot of that is immersed in tax strategy. Um, but an S corp itself can be. So you've got becoming an S corp if the income is there and if it makes sense. There's a whole bunch of stuff there. You've got to pay yourself a reasonable wage. Uh, Another thing, like I said, would be hiring your children. If you are an S corp, you can create an accountable plan. What an accountable plan does is it allows you to write off or make non-reportable a lot of expenses that have a bunch of nonsense that would make it either where you would only receive half of the benefit or you wouldn't receive the benefit. So by creating an accountable plan or expense reimbursement plan, you can realize a lot of tax savings there. And then one of my favorites is because it's technically considered de minimis by the IRS. That just means whatever. It's not a whole lot of savings. Um, So it's really easy to manage. Would be something we call the 14-day rental rule. So this would allow a business to literally use their personal home or one of their investment properties or one of their rental properties as a place where they're doing their minutes meetings and their corporate formalities. So the IRS would allow you to rent your own home or your own property for up to 14 days, and that income is not taxable. So it becomes cash flow, right? So there's comps, there's different things we have to do to make you qualify for that, or compliant, I should say, for that benefit. But for most clients, this is anywhere from 2 to 7 grand that they can save on their taxes by way of just doing what the IRS requires them to do, their minutes meetings and their formalities. Uh, we orchestrate and we help you keep in touch with all those things. So, really quickly to review, I know I said a lot. Everything that I just said, every single thing is automated. So all the real estate investor is having to do is wake up, business as usual. Oh, there's 3 emails from Mode Wealth. Oh, I have to tell him this month what I did for hours for my real estate professional status. Great. Oh, my kids' timesheets just came in. Let me tell Melvin and Mode Wealth how many hours my children work, right? Everything from the employment agreement with the children, the lease agreement for Augusta, all those things we have procured and ready for you, automated digitally every month, and then stored in your Mode Wealth portal so you can be compliant in the off chance of an audit.
How old does your child have to be? Could they be
Good
have to
question.
read and write? I mean,
It's what's interesting about that is this isn't a state specific rule, but for some reason states define it differently. So I'll just tell you the way that I try to get as close to the IRS as possible, 7 to 17.
Nice.
And that whole hiring your children idea came out of the farming industry, of course, in the early 1900s. Kids weren't going to school, and there had to be a way to give some benefit to farmers for breaking child labor law, I guess. so, so the benefit of that was, again, the necessity of the family farm
Uh-huh.
has carried over, and it does translate well even into today's time for various reasons. For instance, I use the family or hiring my children largely as an educational tool. I have my children reading all types of books, right? Books we've all read, the Cash Flow Quality Infinity Banking Concepts, all those books, anything done by Kiyosaki. Basically, um, educating them and then having them report back to me and tell me what they learned. Because again, in between the ages of 7 and 17, work looks a whole lot like education, right? So keeping that in mind, it allows us to, and it's a necessity because who else is going to do what we do in a family business if we don't take the time to educate? So I love that aspect, and again, we do manage that strategy. And for my children, it's not a whole lot of fun outside of the idea that their
Right.
college is being paid for with the money that we save. So
Oh,
I
yeah.
like it eventually.
And one day they'll look back and appreciate all that financial education you're giving them when they realize that they would never have gotten that anywhere else. And then they come out at a certain age, well
Well,
educated on finances. So,
Totally.
I hope so, but most of the time they're doing this while I'm talking to them. It's like, all right,
yep.
bones in a bucket,
That will be a rear
everybody,
view mirror
bones in
appreciation.
a bucket. Exactly.
Awesome.
So,
So some of those tax benefits that you had mentioned as far as the becoming a real estate professional, um, and now that is something that a person that in just passively, that's not really something that they're going to be attaining if they're just simply a passive investor, correct?
Correct. The vast majority of people, quite frankly, aren't. It's almost not possible sometimes to be a real estate have a real estate investor status. I mean, it's not just the 750 hours; it's the keeping of the log, which again we do automate to help. But again, there's 50% of the time that you spend has to be spent doing it. And also you have to have 1,000 hours that's spent on your own
Makes sense.
personal real estate. So you put all those things together and it can be hard. And again, the idea of material participation is always an issue. Um, but a lot of people don't realize this. A good accountant will know that you can actually elect to aggregate those hours so that they work consecutively. It is an election, and if your CPA or accountant doesn't know that, they could be putting you in a tough position. Um, but again, we know to do it. So these things can work concurrently and we can put you on a track. So a lot of times what we end up doing, well, every time we have a client that wants to achieve the status, is we do an interview. We collect we understand what they're trying to do. And then we give them a realistic view of how long it's going to take them to get there. And should they decide to do it, fantastic. But here's the key. We have a tax plan and we can clearly show them how much money they're going to save by being able to utilize that benefit, which makes it worth it for the
Yeah.
vast majority of investors.
Definitely.
Wow. So you're saying it really is to their benefit, even if they're a passive investor, to somehow get a professional status to increase their tax benefits.
I'll give you an example. Let's say somebody, again, someone has $50,000 of depreciation and $100,000 of revenue. So, I mean, again, that would mean effectively in their case, $8,000 of tax savings. So it's fairly beneficial even on a scaled down version. Again, I'm making
Right.
so many assumptions,
Yeah.
it's ridiculous. But again, to give you a general idea of how it can be realized in real time as far as tax benefit, we're almost always talking thousands of dollars in tax savings.
Wow.
That's awesome.
Yeah.
So
So
could you,
if you're okay,
sorry, go ahead.
go ahead.
What I was going to ask is how important is it, like, so you're passively investing and you have a full-time job elsewhere, and you don't have a business set up. What is your advice on that?
Get a business set up. So my first thing would say is we'd start an LLC, and then this what you just described is a typical engagement for us. Okay, so we've got a doctor. They're always doctors. We've got a doctor who wants to do syndication, and they are trying to figure out a way to offset their
Right.
1040 or their W-2 income. So they'll come to us and they'll say, what do we do? Well, the first thing we'll do is we'll typically set up an LLC, and accountants are always using words to let you know there's always differential circumstances. So it's just, again, I'm being very general here. But we set up an LLC. If it's one person, it'd be an LLC. If it's multiple people, maybe it'd be a LLP, limited liability partnership. We take inventory of the asset and we figure out how much income that asset would achieve. But the LLC would achieve one thing primarily, which is the biggest fear for someone that's a high wage earner. It's corporate veil. It's just separating your liability of your business from your personal assets. That is literally the only thing an LLC does for you. It does nothing else. It just serves as a way to protect you or create an umbrella between your business pursuits and your personal assets. Should someone come after you, try to sue you, so on and so forth. So that'd be the first thing. The second thing, actually, I want to make sure I understand. Say your question one more time because I've already.
Well, you answered the question.
Sorry.
No. The question is
I
that
answered, okay,
basically
yeah, so
should
we
you know
set up
how
the
important is
LLC.
it for someone that's passively investing
Yes.
set up an LLC? And so you answered. You're like that's the first step.
Yes.
So
Thank you. Yeah, it would be the absolute first step would be to set up the LLC to create a corporate veil between them and their personal assets.
And then that LLC would be what invests in the, let's just say, because of the sake of multifamily investing that we're doing for this podcast, then they would invest passively as an LLC in that syndication.
100%, because the name on the contract dictates the taxation event. So if it's their own personal name, they're foregoing the benefit of the LLC.
So if I'm out there and I'm this passive investor, maybe I'm an active investor, maybe a little bit of both, how do I go about finding a tax professional to help me, or vetting and knowing that they're the right person to be able to deal with multifamily? Because I could do a quick search on the internet of tax professionals or CPAs. Like, how do I go about finding and knowing that this person is going to be the right person to help me in a business setting?
That's a brilliant question, because it's so critical. And yes, so what happens is most people would see the CPA or they'd see the enrolled agent, and they would make an assumption. I love the idea that a CPA carries so much gravitas, in the sense that it says, okay, we worked really hard to get this designation, but CPAs work in a plethora of niches. So what I would ask my accounting professional is, how many business returns do you do relative to individual returns? Would be my first question. Okay, because it's so different. And what you'll find is that most people that focus on individual returns, they simply they don't have a lot of acumen with business returns. Right? So when you say tax planning to someone that does individual returns, here's what they're thinking: end of the year tax planning, 401k, qualified accounting, that type of thing. They're not thinking about passive investments. They're not thinking about capital gains, although those are things a lot of times that they'll come across. Those things as an entity, those things as a lifestyle, and all of the tentacles of possibility typically aren't taken into consideration. So really what you want to do, regardless of the designation, whether it's a CPA, an enrolled agent, accredited tax accountant, or an accredited tax advisor like myself, you want to ask them how many business returns they're doing. And I'd ask one more question. I'd ask if they have access to legal counsel, because any accounting firm working for businesses that doesn't have some access to legal advice, whether it's on their firm or through some type of provider network, is opening themselves up to a type of exposure I don't want. So Mode Wealth does have legal counsel, because there are things that need to be run by a tax attorney. So the idea is that tax attorneys are expensive. You betcha. Right? But what Mode Wealth has done specifically is we've figured out a way to ensure a return on investment for our clients while giving them access to some of these high level services. And the way we've done that is with a subscription as opposed to a lump sum engagement. And sometimes it's a combination of both, depending on the scope of the work that we're doing. But in most cases, we become business partners with our clients. They have an affordable monthly subscription, but every time they pick up the phone, they're not being charged billable hours. That's a key. And I'll say this because, Colleen, that's such a brilliant question, because here's what happens. What happens is you end up calling your CPA or your enrolled agent, and here's what they're trying to negotiate. They're trying to negotiate the cost it's going to take them to do the work relative to what they can save you, because their system is billable hours, and all of a sudden it negates value, and they're no longer the firm that you should use because they can't provide you with any benefit, because it's going to cost you so much. So you have to have a company that understands businesses enough to have a platform which allows for the business owner and the real estate investor to make money without having to pay the accountant just to realize no ROI.
Yeah, that makes sense.
That's why it's a heavy question, right? But it's the truth. I mean, how many times that's what happens? These investors, they'll call and they'll get on the phone with some really awesome firm that can do exactly that, but their gross income is $300,000. It's not 1.3 million. So the vast majority of these real estate focused companies are billable hours, but their customers far bigger than that layman investor that's just trying to get into the industry. And so I always say that everybody wants to be there to help you with your money when you got it, but you've got to find a company that's willing to help you get
Yeah.
it.
Yeah.
That's the key.
So when you said ask your CPA what type of returns that they do, if they do the business returns, is there a certain percentage that you would be looking for? Like, 75% or more is business, or or if it's just even less than that, they wouldn't be the accountant firm for you.
Yeah, that's a good. Yeah. So I would say the majority of their returns needs to be business return. The majority of their clients need to be business clients because it's an aspiration for most accountants. They do 5-10% business returns. They're just not doing enough of it to stay completely abreast to the changing laws, to stay completely abreast to all the things that change. You got Tax Cuts and Jobs Act, you got pending Biden legislation in 2025. There's just too much to manage. So they end up providing cookie cutter YouTube solutions, right? To a very very big robust problem, and what makes it to where it's harder to get a return on investment is simply the formality. The things that we've automated, they won't have automated, and so the amount of work that the investor has to do to stay compliant opens up a lot of exposure to it. So I would say, are you a business accountant? And they say yes. Okay. How many business returns to personal returns do you do? 50-50. Maybe that's reasonable, maybe it's not, because if they said 50-50, my next question would be, do you help clients with their formality and all the things they've got to do to keep their business compliant? And if they say no, then they're not focusing on business clients. There's just so much that can get you in trouble, you know, where you really want your accountant to be full-time focused. Ownership and investing is a lifestyle. It's not just we do this because nobody, sure, investing is fun. Real estate investing is fun. But when we're talking passive investments, it's because we have a way that we want to live. So why would you hire an accountant who is specifically focused on wage earner and doesn't understand your lifestyle?
True. Very true.
They have nothing they can give you.
It's definitely very important because if they can't understand the lifestyle, how are they really going to be able to frame that out? So that's very good advice. Definitely.
Thank you.
That's a lot to chew on.
No, it is a lot to chew on. Yeah, exactly.
This is going to be a podcast. Even though I'm part of the interview team, I want to listen to again to really take that all in, because that's a lot. I mean, the one thing that I've learned over the course of time is that I would love to be able to have a conversation with my tax professional where they're willing to take the time to explain to me things that maybe I don't know the smart question, but be able to guide me to maybe getting an idea of what I'm trying to ask. Because I feel like in the past I've had nothing but having to educate myself so much on tax law to ask the smart question to find the right person, that it exhausts me. And then if I get one person that sort of feels like they might be it, I just go with it because of just level of exhaustion. And then again, having to do the repeat process, rinse and repeat.
Yeah.
Sometimes rinse and scrub and repeat.
No, it's
So,
true.
yeah.
I definitely feel that. Like, you want to make sure your tax professional knows the right questions to ask you, so you don't have to come up with all the info. They have like, okay, give me this, this, and this for information. So this way, you're giving all of the information, but you're not needing to ask your tax professional to ask the right questions. So I think that's the priority definitely there, is making sure you do have somebody that's business focused, that already knows all of it, knows the lifestyle and knows all of those questions. And there's huge value in that. And the planning ahead of time is just so big. That's just so much can be gained or lost in that. Like, I feel like a lot of times people don't realize that if you're not doing tax planning, you're leaving money on the table. It's actually costing you money. You don't see it because it's taken away later at the end, but it's just not front of mind for a lot of people or business owners that I think it should be. So hopefully that's what a lot of our listeners take from that, for sure.
Well, Candace just made me realize something else that you can do that would be a sure shot indication of whether or not the accountant is ready for you. Evaluate their onboarding process. If they're not asking you business related questions in the very beginning, they have no plan in
Oh,
saving you
beautifully
money.
said. Oh, thank you. That's very true. That's very true because in all of the accountants that I've had in the past, and I think about just that one
Mm-hmm.
tip of advice, the ones, uh, every single one of them, absolutely not.
Mm,
Just upload everything in my portal.
You're a
That's
cog in the
it. No,
yeah.
wheel.
no conversation, no nothing.
No consultative advice. You give me information. I tell you what you owe in tax. I'm going to parade like a tax planner, but I have no actual strategies to help you. And that's a very, very common thing. It's a very, very, very common thing.
Wow. Beautiful. Oh, wow. That alone.
Yeah.
Hindsight 2020.
So, Melvin, if our listeners want to get in touch with you because they think you would benefit their business, how would they do that?
Yeah, so you can go to ModeWealth, MODEWEALTH.com, and right there on the front page it says request a discovery or first meeting or something along those lines, and you can hop on my calendar and we do a 30-minute discovery, in which we ask you a bunch of questions and show you exactly what it is that we can provide. There's never any obligation, and the cool thing about the way that we do it is once we have an understanding of your situation, pre-engagement, we show you how much money we can save you on taxes. So pre-engagement, and so that way you can make a conscious, deliberate decision, and you can say, okay, I know what my return on investment would be, and it makes sense to move forward with this firm. So again, front end knowledge of desired tax planning strategies with a return on investment, um, with compliance implementation, where you can spend 8 to 10 minutes a month doing the things that you know are going to keep you out of trouble with the IRS, in the most compliant, moral, legal, and ethical way, so you can go out and find property and find syndication opportunities.
Nice.
Sounds good. So, we like to kind of wrap our podcasts up with a little mindset, thought-provoking quote of the day type thing. So Tamara has 3 of them that we've picked out that kind of fit your situation. If you could pick a number 1 through 3, and we can kind of discuss it and see what it brings to your mind.
Oh, this is great. I thought you were going to make me come up with something on the spot. That would have been fun. It would have been inspiring, I promise. I'm going to say, everyone probably always says 3. So I'm going to say
2.
2.
Okay. All right. An investment in knowledge pays the best interest. Benjamin Franklin.
An investment.
Wow.
Yeah,
That is really
that's
good.
good. That's a good one. What are your first thoughts, Melvin, when you hear that? What does that bring up for you? Sorry, no pressure.
It actually, no, I love it. It makes me think of the next stage of my company's progression, actually. Again, everything happens in due time, right? And when had this company now for 10 years, but when we first started, we were inundated with case study, where basically we had to figure out what are the tax codes, what are the laws, and through trial and error, we figured out a very specific route to go about it. But now, training, education, webinars, what do you call it when you log in?
Yes.
Online classes are now things that we're now starting to provide to complement or to supplement the individual tax strategy. So with that being said, January 1, we're actually launching our Tax Plan University, where a client, when they come on board with us, they're not just getting all the strategy and all the things that we've said, but they'll also get a login and a portal where they can log in and they can have the specific strategies laid out in a way where they can go and continue to educate themselves on them. So again, education is just super, super important. And that will allow us not to, of course, have the, those questions that are specific to strategy. They can now log on and do the research on their own, in addition to being able to reach us. So
That's great.
Well,
more
you picked the
service.
right one then. You picked the right card.
Yeah.
You did. We didn't do that on purpose, I promise.
Exactly. This is not staged.
Oh, yeah. I definitely think it's a super relevant quote. It works out well. And the first thing I think of as, somebody like my investment in a tax professional gives me all of the knowledge that I need. And that is the best interest, because instead of, something so specific like taxes, I don't want to have to educate myself in all of those little nuances because that is so much more than you can get from just a book. I think that investment is investing in someone else's knowledge sometimes. And this might be one of those situations. You're getting someone on your team, on your side that has all of that knowledge. And that's an investment, but there's no better interest that you're paid than that, be it tax savings, compliances, just the security of knowing like you're doing everything the right way is definitely awesome. So that's what I think of when I hear
100%.
that quote. Yeah.
Sleeping at night. Absolutely. And I just thought of one more thing. Join Melvin, MELVIN.net.
Okay.
Joinmelvin.net is a direct calendar link where you can just say schedule Melvin and it goes right there. Just because my website, although it's beneficial, it does have on there prices that don't necessarily fit every client. So I wouldn't want it to discourage someone because that more than likely isn't their engagement. So, so I would go directly to the link, talk to me directly, and we'll figure out your individual situation.
Beautiful.
Perfect. Well, this was an awesome, super informative episode. Thank you so much, Melvin, for being on here. Really knowing who it is that can and can't take advantage of those benefits are really important because for your average passive investor, it can be a little misleading when you see like depreciation tax benefits, but it's good to know that that's not applicable for everybody. And I think that a lot of people do need to know that. And for those that it is applicable for, it's good to know the right questions. How do you find the right CPA? Because just because you can apply it doesn't mean it will get applied if you don't have the right professional in your corner. So that was an awesome episode. I hope our listeners enjoyed that as much as I did, getting all of that info. So yeah, thank you so much, Melvin. Yeah.
No, you're welcome. Crystal, Colleen, Candace, Tamara. 3 C's and a T. That's what it should be. 3 C's and a T. I'm originally an English major, so I love alliteration. So before tax, it was books.
Nice. Well, we also want to thank our listeners here. Thank you guys for listening and joining us here at the roundtable. If you want to find out more about us as well, of course, you can always check us out on our Instagram, Facebook, YouTube, or visit us, of course, at therealestatewomen.com. So again, thank you, Melvin. Thank you, listeners. I hope everybody enjoyed this.
Thank you, everyone. Thanks,
Bye.
Mel.
Thank you. Bye.
The information contained in this podcast is for educational purposes only. We are not licensed professionals and do not give investment advice, tax advice, or other professional advice. Please consult a licensed professional before making any financial decisions.